As an estate attorney, practiced for many years, I worked with a lot of retirees, as you can imagine. One thing that I came to know is that many retirees experience stress about money, and particularly tax ramifications, when they're using qualified accounts. So in today's example, one of our high cash value whole life experts, Barry Brooksby, is going to share a situation with a business owner who felt that he was getting started late in his retirement planning. If you've ever felt that way, we understand. And in this case, Barry's example, Barry was able to get really good additional tax-free income for this particular client using a properly designed high cash value whole life strategy. So Barry's going to go through this example, the actual numbers that he worked out with this client. So let's give it a listen, and when he's done, I'm going to jump back in, offer a quick summary, and if this applies to you, I'll give you some quick action steps that you can take. With that, take it away, Barry.
We'll be looking at a 50-year-old business owner for our case study today. He started late on retirement planning, but at age 72, he'll be able to turn $510,000 into more than $1.2 million of tax-free income using the strategy that we're going to talk about today, which is a high cash value, properly structured whole life policy. The focus in this policy is on maximum cash value growth and tax-free retirement income. He's currently contributing to a 401k, not getting a match, and may still continue to contribute to the 401k. That's a personal decision for all of you listening. But I wanted to use the 2023 contribution limit for employees currently, which is $30,000 a year if you are age 50 or older. So the premium amount that we'll be looking at in the high cash value policy is this $30,000 a year. The way he's funding the policy is he's planning on working through the age of 67. So $30,000 a year will go into the policy through the age of 67. And at that point, he's going to stop funding. So the zeros that you see here mean there's no more premium going into the policy. He put a total of $510,000 into the policy. And even when he's done funding, if you notice this column right here called total cash value, his money still continues to grow. At the age of 68, with no more premium going in, his cash value of $750,000 grew to $790,000 at age 69. That's a $39,000 increase, Steve, and he didn't put in any more money. The next year, from age 69 to 70, his cash value grows to $832,000. That's a $41,000 gain. And remember, if done correctly, all this cash value will come to him tax-free. No reporting to the IRS, doesn't have to claim it on his 1040 tax form, nor does he have to tell his CPA or accountant about this income. 401k income is 100% taxable. Whole life income is 100% tax-free when done correctly. Using a high cash value whole life policy for income can keep you in a lower tax bracket. When he takes money out of the 401k, he'll be paying tax on 100% of that money. But in the policy, he'll pay 0% tax on this income. Let's now look at the income. He stops funding the premium at age 67. He's going to let the cash value grow until the age of 72. At age 72, he's going to begin taking $65,000 out a year. This $65,000 a year income will continue every year through the age of 90. Remember, this is tax-free money. So if he were wanting to net $65,000 a year out of his 401k, depending on his tax bracket, he might have to take out $90,000 to $110,000 just to net the $65,000 after he pays the taxes. Steve, let's do the math. Remember, he put in $30,000 a year through the age of 67, which equaled $510,000 of contributions through that time frame. He's taking out $65,000 a year for a total of 19 years. That's $1,235,000 of tax-free money. Steve, that's a 12.75% distribution rate for income, meaning 12.75% on his $510,000 of contributions is paying him $65,000 a year. What a remarkable outcome. And if he passes away at the age of 90, he's still able to leave a $187,000 death benefit to his beneficiaries, tax-free. All in, between income for himself and tax-free death benefit for his family, that's over $1.42 million of tax-free benefits. For many reasons, this is the perfect financial strategy. Compound growth works for you every year. The high cash value policy will enhance your portfolio because of the guaranteed growth, the access to liquid cash, and tax-free use of that money. You'll never lose money with this asset. It gives you 30 to 50% more spendable income in retirement. Why? Because you can spend and enjoy all of your assets knowing that you have a permanent death benefit that you can leave behind to heirs. And because the money's guaranteed to grow every year, you don't have to worry about stock market volatility. Steve, back to you.
Okay, great example, Barry. I always enjoy hearing about somebody establishing massive tax-free income in retirement through these strategies. It's so powerful. 401ks are taxed, whereas high cash value whole life is not taxed and not even reported if done correctly. So that was a key part of Barry's example. Again, this was a 50-year-old business owner who put in roughly $510,000 and took out roughly $1.2 million in tax-free retirement income. Also, remember that there were living benefits connected with this, so that cash value was available for long-term care, chronic illness, terminal illness, which are all key factors when you're doing retirement planning and considering the costs. Another thing that Barry offered in this case is he ran the numbers on the $510,000 invested into the policy, and the $1.2 million plus the death benefit was about $1.4 million. So he did some math in terms of the return on investment with that, which was pretty powerful. If this sounds interesting to you, sounds like a way that you can supplement your retirement plan with tax-free income, guaranteed growth, asset protection, there's going to be a calendar link below wherever you're watching this video. Encourage you to look at your own numbers, schedule a one-on-one with Barry wherever you're watching. Also encourage you to leave a comment, question in the comments, as long as you keep it classy. We respond to every comment and welcome your comments. With that, thanks so much for watching today, and we'll see you in the next video.